Hey everybody, Signet here with the Bullish Bears. Wanted to do a real quick recap on the Verizon trade that we sent an alert out the other day to take. So this trade, I went ahead and rebuilt it here uh, to show you the trade that we took. We had the 56 half, 57 half, and a debit spread. We took this trade because we were watching Verizon come down and bounce off this 200 moving average. We sent out the alert the next day and we took this for a ride back up. Our target profit goal was 50%. It was a bit aggressive, but this was an aggressive move down and we wanted to take advantage of the situation. Normally, in a very short duration trade, we would really just try to hit that 35-40%, but we went ahead and took it at 50. This trade is still in play, but we're starting to get some ambiguity in the candle pricing here. If you traded this with more than one lot, you're probably still in the trade. Today would have just been your opportunity to get some profit out of the trade, right? Get risk out, make sure that you're getting paid, and then leave perhaps another lot on as a runner. So I ended up getting into the trade for 45 cents. I worked the order. Instead of getting it at 50, I got it at 45. We go over to the Analyze tab. This is the trade that I had. I had it for 45. My max profit was 55. Of course, we can't get max profit, right? This is a debit spread. We can't hold it to expiration. We cannot get max profit, and we never try to. We want to make sure that we're consistently closing these trades for profit. We want to build our win rate so that we can increase our risk to reward ratio and really grow our account, right? So a $45 trade, we wanted to hit 50% profit in this aggressively. We would look to sell this trade for around $67. Now, if you're like me, perhaps you like to tuck your commissions in there a little bit, right? At least half your commissions, depending on who your broker is. So oftentimes I'll hit my percentage goal and then I'll try to work the order to kind of cover some of my costs from the commissions, right? So instead of getting 67, perhaps I would go with just a flat $70, right? And you can see that this trade right now, if I just right click in Thinkorswim and hit closing order, it pops up at $68. The 50% profit was 67 half. So if we round it up, that would be $68. That would be our 50% profit. I want some commissions out of this. I didn't close the trade yet, but that is what we would look to do, right? And that is how you calculate your trade. So if we was just to jump down here real quick and look to build another one, see this is $1.67. I like to put my closing order in right when I get into the trade. So if I was to enter this trade right now, I would automatically put in my closing order. Now there's a couple reasons we want to do that. Options pricing can expand or decrease drastically because of volatility. So oftentimes we don't need price to move. Sometimes we just need volatility to move. That volatility can spike very suddenly and then very rapidly fade back out again. And those spikes offer you an opportunity to get out of a trade that you would never have noticed even appeared, right? I don't sit all day long watching the volatility rise and fall on these options because who would, right? We got lives to live. We don't want to waste our time doing that. But when that volatility spikes in these options, it can get you out of a trade hitting your target profit without a move in the underlying stock at all. So you always want to have your order to get out of the trade put in. Well, how would I know what my target goal would be if I paid $1.67? So I could go over to the calculator and we could put in $1.67 and then we can add, say, 50%. And now I could see I could put my order in to close at $2.50, and then perhaps I want to get some of my prices back from the commissions. And so in my own mind, I would think, all right, I would just add a couple more pennies here. So I would put in my closing order at $2.52, maybe $2.53, and that would be getting my 50% profit, right? So the Verizon trade was opened with an alert. We sent out the alert for $50, and so we would be looking to close that trade at $75. That was hit today, and so the trade is closed. This here, you can see this is a simulated trade. I do like to put the trades into my simulated account too, because I keep track of these. We do Excel spreadsheets keeping track of the graph of the win-loss ratio and kind of how we're doing overall in the year. And I don't put all of my own trades out there, not all of them, so I don't want to get things mixed up and have to jack everything around. So this trade was built with a $45, and it is at its closing price. Just haven't closed it yet. I'm trying to work the order a little bit and get commissions out of it. I'd rather close it for around $71, $72. And you can see that the trade is still a viable trade. There's no reason to think that we won't hit our goal even with commissions added to it. So I want to thank you for watching this recap. I appreciate it, and I look forward to seeing you at the next video.